Patrick, I think you gotta click the unmute button on Discord. I think you gotta the unmute button on Discord.
Testing, 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 testing. I apologize for that tech issue, but once again, what I'm looking at here is an article that came out on August 1st regarding the IMF proposing a new world currency to replace the US dollar and other national currencies. And I'm going to post a link on my private trading room, and I'm also going to post it here on my YouTube account for those that are interested. Or you can go to monkney.com and take a look at the article. But I think it's a major turning point in the monetary system that it is not being discussed openly. In addition to this article that proposes to replace the US dollar with the SDR, which is the world's reserve currency, is the reason why we are seeing the metals and digital currencies down. We're in the middle of a major war between Bitcoin and digital currencies and fiat currencies. Now, in addition to this proposal, the IMF has issued 650 billion euros to be set aside additionally. So the IMF is printing money because it anticipates that the world economies are going to need that capital as they make the transformation and reset the economic system. We're beginning to see the reset of the monetary system is really the reality of what we're looking at. And the fact of the matter is that this major attack that we had in precious metals here. Recently, since Sunday night, where I believe there was $4 billion of short contracts executed in the paper market, which pretty much collapsed the precious metals markets. I want to come back here to digital currencies in a minute, and I want to look at what's going on here, because if the market perceives what's going on here, we're looking at basically the creation of another fiat currency called the SDR that could be entering the arena, challenging the US dollar, as we see the government in the United States begin to increase and pump the stimulus package, which essentially means continuing to chip away at the US dollar as the world's reserve currency. Right along with that, we have we have Bitcoin competing for a decentralized global currency. And so this is a historical moment, I believe, that we are experiencing, and it basically, I believe, represents the transition of the US dollar into potentially a basket of currencies, as opposed to being the leader of the world's reserve currency. So it's going to be interesting to see how politically this is handled, obviously. But I'm going to be talking about this a little more in as I dig in, so to speak, into some of these developments that are not publicly advertised. They're not talked about in any station, CNBC or otherwise. But if you dig in, you can really find some incredible evidence that indicates that something is going on behind us, that it's not being discussed, but it is important enough that it could change the face of our future, the face of our currency as we know it, and the face basically of the future of our kids. That's a major development taking place that should be discussed publicly, but it's not. And instead, what you're looking at is the manipulation of gold and silver to levels that are unjustified to basically this development. And who's behind this? Central bank shorts that are selling massive positions of paper inventory that doesn't exist. Let me come back here and kind of dig into what we're looking at. And we can see the volume. You can see the pressure of paper coming in here. And if you take a look at the Commitment of Traders report, you can you can verify basically that the short position has not declined, even though Basel III was implemented, which meant that the central banks that were issuing unallocated contracts or leasing had to be fully funded, not leveraged, but fully funded. And that pretty much takes away the capital reserve, or uses a great deal of the reserve, the capital reserves the bank has, that essentially makes it more difficult financially to take such huge short positions in the market. So, but in the meantime, when when we see this massive amount of paper contracts being sold, you can see the price obviously fall apart, and it usually is during the early hours of the morning, early morning, when everybody's asleep in the U.S. And very difficult to do anything about it. Sunday night, the minute the market opened, they came in and hit the market pretty hard, and this is where we got about $4 billion worth of futures short contracts when there were no bids underneath. Of course, anything underneath the market with regards to bids were taken out. I mean, they were completely taken out. And we came down and we made a low of 1677, 1678, coming down to the previous March low that we saw, double bottoming pretty much. And look at this big move here that where essentially buyers came in. And it came in right into the area. If we talk about the VCPMI, which stands for the Variable Changing Price Momentum Indicator algorithm that we use to identify where the market is, even in days like this, it came right into this weekly area in blue, which identifies that you should be accumulating supply or covering short positions and activating daily, weekly signals. As you can see in this green bar, a major reversal took place that brought the market up daily, weekly, and monthly, and traded above the daily average of 1745. And that's where we are right now. So the signal is in a bullish price momentum, and the targets above are defined automatically into that 1760, 64, 65 level to 1794 level. And that puts us into the weekly average price of 1786. For most viewers and most subscribers or people that are just coming in and seeing what work I do here, obviously I'm showing you the charts that look pretty busy and confusing for some, but it is a combination of Fibonacci trend lines, Fibonacci resistance or Fibonacci retracements, fan lines, and the integration of the VCPMI. If you use the VCPMI alone as a GPS, it gives you a tremendous probability result that is very, very positive. And for technical analysis purposes, I'm integrating all these other metrics that pretty much integrate themselves into the code. And so what we're looking at here is what looks to be a bottom unfolding with major daily, weekly, and monthly signals. Let me take a look at the monthly. The monthly signal came in after the test yesterday. This is the monthly VCPMI signals. The buy one level was at 1707, and we reverted from there, activated a buy trigger, and that's pretty much where we are. The 1810 to 1813 area is the target. And if we are able to get above 1810, then we're going to be looking at the market engaging the annual buy trigger, the average annual price of 1810, as well as the monthly average price of 1813. And that would complete the harmonic alignment in all of the trends that indicate that this previous correction that we have seen is completed. So let's watch the market here for a little bit and see what it does as we feel that this is an opportunity once again to accumulate. The correction obviously has affected digital assets like coin, Bitcoin, which are the instruments that we GDLC, which are the instruments that we are trading that are in the digital market. And I think it's fair to say as well that we've seen a pretty big move here. It's a breakout on, for example, GDLC from a 21 level that we saw just on July the 20th, where we are at 40. That's doubled. That's almost doubling. And it has doubled from the low that we saw here. And this is in 30 days. So, excuse me. This is what I believe is the market anticipating where we're going with regards to monetary policy and where we're going with regards to the US dollar. There is a great deal of money that is looking for an alternative asset, pretty much that is decentralized from the banking system. And Bitcoin fits that category to a T. And so also there's a great deal of money that's been going into digital assets and that are going into a Grayscale, a Bitcoin investment trust. Just be aware that these instruments are highly volatile, and when they move 20, when they almost doubled, you might say, in the last 30 days, a little bit of a correction is just an opportunity to get on the long side, because I think this is just the beginning of a massive transfer of wealth and a distribution of wealth outside of conventional fiat currencies. which may include, obviously, the US dollar, particularly because it is the world's reserve currency. And I believe that this anomaly that we are looking at in the price of gold and silver um, will adjust, will adjust. And so uh, the thing that I want to just kind of leave you with here is the fact that the bottom line here is that the IMF has created another uh, level potentially of stimulus that is about 650 trillion euros. I'm sorry, 650 billion euros that is set aside for countries that may be running into a shortage of dollars, potentially, that can begin to use the SDR as a replacement. If we go into a credit crunch, a credit squeeze in the US markets, as we saw back in 2008, particularly if we move into another lockdown, which is what it appears that we could be moving into. Let's talk about the variant spread increasing. And so anything is possible now. But uh, if that is the case, and we do see some kind of an implosion once again, I think that might be the scenario where the SDR is introduced. So prepare yourself, be aware, manage your volatility accordingly, be patient, because I believe that digital assets are increasing the exposure and the attention of world investors, and certainly they are justified, particularly Bitcoin, as they were in all of the derivatives of Bitcoin, as well as gold and silver. So just continue to be patient and continue to hold on to your position, and I will be updating you next time. In the meantime, my friends, have a great trading day, and we'll talk to you soon.